Hello everyone, welcome to today's session on Introduction to Business Finance. In this video, we will delve into the fundamental concept of business finance that are essential for understanding the financial aspects of running a business. So let's get started. To begin, let's understand the scope of business finance. So basically, business finance refers to the management of financial resources in an organization. It involves making financial decisions and strategies to maximize shareholders' value and achieve the company's financial objectives. Instead, imagine you want to start a business. You need to consider how much capital you require to get started. Where will you source the fund? How will you manage those funds to ensure the success and growth of your business? That's where the business finance comes into play. So basically, business finance is a crucial for the success and growth of any organization. It helps in assessing the financial health of a company, making informed investment decision, managing cash flow, and ensure sustainable profitability. By efficiently managing finances, businesses can seize opportunities, overcome challenges, and achieve long-term success. Let's take the example of the company that wants to expand its operation. They need to evaluate the financial feasibility of the expansion, determine the investment required, and assess the expected return. Without proper financial management, they may face cash flow issue, miss out on the growth opportunity, or even the overall stability of the company. Now let's explore the different sources of finance that business can utilize to raise funds. There are the primarily three sources of the finance, that is equity finance, debt finance, and hybrid finance. So for instance, when a company decides to go public and issue shares to the public, it utilizes equity financing. On another hand, when a company obtains a loan from a bank to purchase a new equipment, it is using debt financing. Hybrid finance, as the name suggests, combines elements of both equity and debt financing. So, the equity financing involves raising funds by selling ownership shares or stock in the company. When individual or institution purchase these shares, they become shareholders and have partial ownership rights in the business. Equity finance is often used by the startup or a company looking to expand their operation. For example, imagine a tech startup that needs capital to develop its products and expand its customer base. The founders may decide to seek investment from the venture capitalists or angel investors in the exchange for the ownership share. This allows the company to raise funds without incurring debt and bring in expertise and support from the investors. So now debt financing on another hand involves borrowing money from external sources such as banks, financial institutions or bondholders. The borrowed amount known as debt must be repaid over a specific period with interest. Debt financing is commonly used for the capital investment or to meet short-term financial needs. Now let's say a company wants to purchase a new manufacturing facility. They may approach bank for a loan to finance the acquisition. The bank provides funds and the company agreed to repay the loan over the set period, including interest. So the debt financing allows businesses to access large sums of money while spreading the repayment over time. In addition to the equity and debt financing, business can also consider hybrid financing. Hybrid financing involves instruments that possess characteristics of both equity and debt, such as convertible bonds or preferred stock. This type of financing provides feasibility in terms of repayment and ownership structure. So now imagine a company that wants to raise funds by issuing convertible bonds. Investors who purchase these bonds initially receive fixed interest payment. However, a later date they have option to convert their bonds into the company share. This hybrid financing allows investor to benefit from regular interest payment while potentially gaining ownership in the company. Moving on, let's discuss lease financing. So lease financing is a popular option for acquiring asset without making a significant upfront payment. In a lease agreement, the lease pays periodic lease payment to the lessor in the exchange for the use of asset over a specific period. Suppose a business needs specialized equipment for a specific project but doesn't have the necessary funds to purchase it outright. They can opt for lease. Financing, where the enter into the agreement with the equipment provider. The business pay regular lease payment for the duration of the lease, allowing them to utilize equipment without a large upfront cost. There are the several benefits of lease financing. Firstly, it allows business to conserve their cash flow by avoiding large upfront investment. Secondly, lease financing offers feasibility as a business can upgrade or replace asset easily. Lastly, lease payment may also have tax advantage depending upon the jurisdiction. Let's say a restaurant wants to upgrade its kitchen equipment to meet the growing demand. Instead of purchasing new equipment outright, they decide to lease it. This enables them to preserve their cash flow for other business needs and also provide the feasibility to upgrade the equipment when needed. In conclusion, understanding the basic of the business finance is essential for apprising business professional. It helps in making informed financial decisions, managing resources efficiently, and ensuring the financial stability and growth of the company. I hope this interactive session has provided you with a clear understanding of the foundation concept in the field of business finance. Imagine you are starting your own business someday. Armed with the knowledge of business finance, you will be able to analyze financial statement, make strategic investment decisions, manage your finance wisely. This will contribute to the overall success and profitability of your venture. So now, thank you for watching. If you have any question or needed further clarification, please feel free to ask in the comment below. And do not forget to check out the description box for additional resources on the business finance. Stay tuned for more video on this exciting topic.